Good morning, traders. Richard here, a quick Ichimoku cloud chart market review of the NASDAQ Composite Index, NASDAQ 100 Index, NASDAQ 100 excluding tech, and the NASDAQ 100 equal weighted index. Still stuck below the cloud. This comes soon after completing a 7 to almost 8% correction that we expected to happen in February month. We had a third wave down, one move down, rebound, one move down, rebound, one move down. So we kind of completed that third wave down, similar to what we've had over here. Now there is some risk that since price action is below the cloud, that is still bearish. For the NASDAQ Composite to be bullish, we need to be back above the top end of the cloud here, and to be very bullish, we need to be back above this top end cloud chart resistance zone. So these are the upside resistance targets, including the standard line of the Ichimoku cloud. We need to break past those levels to be ultra bullish on the NASDAQ. Currently still stuck in a bearish state with the bottom end of the Ichimoku cloud, a significant resistance zone there. So the catalyst to look out for is a breakout past this bottom end cloud chart resistance zone, and if that resistance level holds, then we've got a problem, because then we've got significant downside risk towards these old cloud chart support zones. Well, we could easily retest these zones pretty easily, but so far so good. We did get a rebound from old cloud chart support levels. We just now need to see that breakout past the bottom end Ichimoku cloud. Now the NASDAQ 100, that is now back above the bottom in the cloud, so that's bullish. We're starting to see some positive price action here. This comes soon after completing a 7% correction, rebounded from old cloud chart support levels. But now watch out for the price interaction at the standard line there, as well as the top end of the front end of the Ichimoku cloud. These are significant resistance levels to get past before we really very bullish on the NASDAQ. But things are changing there. It's fighting for support here at the bottom end of the cloud. As long as we stay above the bottom end of the cloud, and even in a sideways moving market, it should be okay. But any price action below the bottom end of the Ichimoku cloud is bearish. Now the NDXE, which is an equal weighted NASDAQ 100 index, stuck within the cloud, so that's not too bad though, because we do see there's significant support here at the bottom in the cloud. Note how strongly the buyers stepped back into the market and drove it higher on an equal weighted basis. So as long as we stay above this bottom end cloud chart support zone, this rally should be okay. But ideally we'd like to break out past this top end cloud chart resistance, and particularly the top end of the front end of the cloud. That's the resistance we're now navigating. We need to see a clear breakout past that zone, and then we've got these old highs as the upside targets. But the interesting story is on the NDXX, which excludes the tech, excludes the heavy large cap tech ones, and we can see this market, this part of the index, has been bullish since basically December. So far so good. You can see how strongly the market rebounded from the standard line of the Ichimoku cloud and is now fighting for support at the turning line of the Ichimoku cloud. Keep a close eye out on the top end of the front end of the Ichimoku cloud, as well as the bottom end of the front end of the Ichimoku cloud. These are critical support zones. But so far, healthy market in the NASDAQ 100 excluding tech. It's only in the tech NASDAQ 100 which is still struggling to stay above the bottom end of the cloud. And then the critical thing to watch out for in the composite index is we really need to be back above the bottom end of the Ichimoku cloud. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.